Okay, so starting point for leveled field platform is this homepage. What we do is we look for events proven to move the share prices. And they can move north or they can move south, up or down, bullish, bearish. Each event type falls into what we call a scenario. So each one of these is a collection of similar event types. In this case, this first one, this little bullish indicator, this is showing when activist investors buy stock. What is an activist investor? That definition, if you click here, you go into the help, and it will explain what an activist investor is. But for the purposes of this onboarding session, we can say it is a wealthy individual that is going to buy 5% or more of the stock. And then they push for changes that boost profits, which effectively drives up the share price. In many cases, either right here on the platform or in this help area, we'll talk about kind of average and ideal fund hold times. It tends to be a longer term scenario. That is one of our easiest scenarios. And that's simply because you just buy and hold. So looking at these metrics, how we read it, so this is saying a scenario return just as the S&P 500 over the past 12 months. Scenario return to move the 107% versus 27% for the SGY, and this is only looking at a one-day price move. So if you look at more than a one-day price move, it's going to be items in this case. So here's the metric for the one-day price move. What it's saying here is that on average, across all the events that meet the criteria of this scenario, which is an activist investor coming in, it moved the share price 4.87% a day, and then over a span of 10 days, a little over 5%. The win rate is the percent at time, then it's bullish, that actually meets the expected direction of the scenario. And most of the time when these get thrown off, it's just then there's bad market days, there might be days where the company is reporting earnings, and that can kind of mess up, how the trade goes, not just part of the game. So we have 24 different scenarios you control to buy, those that have the most events, those that are bearish, those that are bullish, those have the highest win rate here. We're going to just browse through. If you like a scenario, in order to get an alert, you simply click this button and you'll get all the alerts. The alerts come through and hit the click this. And you get this kind of alert into your inbox. I can let's say, okay, yeah, I can see what happened. I have a little bit of information on the stock and can go from there. You can also customize those. I'll show you how to do that in just a minute. So it can be a bit overwhelming when you first get started. So the advice we always give is just take 1 to 2 scenarios to focus on. You can ignore the rest and think of each scenario like a strategy. What you're supposed to do is say, invest and reinvest again and again in the same type of event. And you can browse through, all these different strategies here. You can see that win rates are different. The average returns are different. In some cases, whether it's bullish or bearish is different. The holding times can differ. Like deal hold times with this one is in your day or longer term. So you get a sense of, which scenarios you like to use and which ones you might not. We jump into this first scenario. It's easy to look at. So in this case, we have 22 events that have occurred over the last year, and you can scroll through this information. We went to the win rate and the one day move already. Over on the right-hand side, you can see, what these one-day moves were. The event impact. You can see some of them jump quite a bit, 22, 21%, 9%. They can be pretty large moves. And you'll note that it says, whether the event occurred after hours, during the day, or before the market opened. If you're not planning on trading after hours, which we recommend because after hours trading is higher risk since the volume is so low, there's really kind of crazy price moves that aren't very accurate. But if you are trading intraday, you're going to find most likely greater success if you're looking at events that happened either intraday or pre-market. Because if they happen the previous day after hours, let's say they happen at, or 05 p.m., it's almost 17 and a half hours until the market opens the next day. That's going to give people a lot of time to hear about the event, maybe price it in, maybe overreact. And so sometimes you see these massive overreactions with the share prices in the after hours. And when they rise at that level, what often happens thereafter is, pretty big sell-off at the open. In this case, when we're looking at when they price moves, we can also change around the types of things you're looking at and say, well, I wonder if, do energy companies do better? Financial services companies do better? Communication, consumer companies do better? We have a small data set for this event type, but for others, it makes it for an easier thing to understand. You're looking at, small, medium, large cap. You can create different sub-strategies that have higher win rates or higher average returns. Maybe you're looking for, companies that have high volume. You can do that. Maybe you want companies that have options on them, so you can filter by those. And then once you have created those filters, you could just put this button and save that particular alert, and that's your custom alert. So where that saves, those to save it goes into my alert section in the dashboard. And these are all the alerts that I have set up. In each alert, you have the ability to set when they deliver. By default, it delivers at midnight ET. So if you don't want that, you want it once a day at 8 o'clock in the morning, ET, do that. If you can only get it in top of the hour, you can also make that setting. And likewise, if you're only interested in getting events that occur between, let's say, 5 a.m. and 10 a.m. every day, you could filter it for that as well. A lot of flexibility there. It's like this little eyeball. It's going to show you, what filters you have. And we can go back to that in a bit. So let's go back to this scenario. In this case, I'm going to pick stop buyback, miss scenario. You can see in this case, we have many, many more events, 205 events, just over the last 3 months. High win rate, high average price move. You could certainly filter this down because that's a lot of events, and you could just say, look, I'm only interested in large gaps, that have a medium or high VE, and they certainly need to have a race. And I also want them to have, high volume. Allow me to trade them easier. So now I have the more manageable amount of events that are in a per 43 events over a 3-month period. I can trade this, or I can use this just to find investment opportunities quickly. It really depends on how you want to use the information. So you go back to the activist scenario that we're looking at to explain how to use this for longer term. When I put that, we're going to go into the scenario again. Now we're looking at 1 year of data. And what I can do is pull up this table view. This allows you to see longer than the 1-day price move. I can look at what happened on day 1, after the event, the 2nd day only. It's after the event. So it'd be that happened Monday. This is looking at only Tuesday. This would be looking at Wednesday, Thursday, and then a month later. And then we have different options that we can drop down. So I'm going to pick, longer term, 6 months out. What happened to these stocks? And you could say, even with some of the companies where, the initial move maybe wasn't huge, later it does move up quite a bit. 40% over a 6-month period versus 3% from the first day. So the averages are down here, and this allows you to really see, what typically happens with a share price. And we often say that this is like a weather forecast, right? This is saying, what's the 10-day weather forecast, or what's the likelihood of rain, not this Saturday, but the next Saturday, and it's not something that is perfect forecast because there are other factors, but you can start to find patterns. Can the data, it's like the average temperature in June in Texas, in Dallas, Texas, you could probably figure that out. It's going to be plus or minus a few points. You can get more granular, by doing some of the data, however you want. But let's look at a particular case study. For this scenario type, I think it's important to understand how to use the level fields, and just for one-day trades or for longer term. So in this case, we're going to look at Salesforce. When you pull up Salesforce, you can see a typical pattern for tech stocks that have happened where, it kind of peaked end of 2021, massive sell-off. So we're looking at down 60% or more, and then turned around. Why did it turn around? Normally, this would be quite a bit of research, but in this case, we can go right here. October 2022, an active suggestor came in. What does this mean? Well, they're going to try to steer the ship in the right direction. They want to cut costs. They want to drive up profits. They want to increase the share price. That's all they care about. So it's a very typical set of events that follow. First thing they try to do, cut costs. Biggest way and the fastest way to cut cost is to fire people. And they push one of the two CEOs out because they could save more money and have more influence. Then they fire 10% of the workforce. Then another activist investor likes what they see, become and join the party. What do they do with all the savings from firing upwards of 10% of the company? Well, they announced that they're going to take those savings and they're going to give it back to shareholders in the form of a share buyback. Whether you buy back the stock or they spend $20 billion to do that. Now, all of a sudden, everyone's looking at Salesforce because that was the monster buyback. So what happens? CNBC starts talking about it. Market Watch picks up that. Analysts start looking at raising their recommendations. And they continue to fire more people, saving more money, and you see the share price going up and 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 up. And what we're looking at from the beginning to the end, that starting point, so we are at $147 a share, and we have now doubled to $300 a share. What will that time period? That time period went from October through March. So 9 months is that 3 and 4, 5, 6 months or so. Not bad return. And that's, fairly typical for the scenario. There are other scenarios that are great. The buyback scenario is great. Dividend increases, awesome. Dividend creation, it's great. Those are very consistent bullish scenarios. There are bearish scenarios that also work really well. And if you're not familiar with, how to play puts or shorting stocks, you could say generally you want to stay away from the bearish scenarios, as they're stocks that are falling, but they do well on days where there's market sell-off. They do well, in periods where the market is just not really in a bull run. So, bankruptcy filings, obviously, pretty bad news. CEO departures, this is one of those scenarios, and I'll flag this. Some of the scenarios, like CEO departures or layoffs, can go either direction. In the case of CEO departures, if it's a company that has poor financial performance, then you're going to see an actual increase in the price of the stock, and the increase is based on hope that if they get rid of the leadership and somebody else comes in, things will get better. And so you can divide the financials of the company to change the scenario. Nearly. For companies that are high-performing companies, that are doing quite well, you're going to be able to filter that information and see, they're growing revenue, and, they're performing well. Yes, there's enough data on that particular sub-filter. Mark, you look at, large caps, they're going to perform a little differently than, micro caps or small caps. You can kind of see what on clicking eyes really changing that scenario in nature. So, for companies that are not doing well and struggling around, it's going to be positive event. For companies that are doing pretty well, it's going to be the main negative event. So, play around with those. And the layoffs is similar, for a large company, if doing layoffs, so the dashboard view. So this view aggregates everything. Now we have all the events coming in one place. That's sort of your central hub. So let's go and look at layoffs. And you can say, what, I'm only interested at Arch. The one they impact is over here, even though, what it's saying is the signal is bearish. The signal's bearish for all layoffs. It's not necessarily bearish for large cap companies. And we go to that scenario, it's easier to see. So we filter by large. You can see all of a sudden now it's bullish. Because these filters are changing around the data in this particular view. So you can look for opportunities where companies are just shedding costs, and that tends to lift the share price. If you are doing options trading, then what you want to look for is events that are occurring, before the market. And what you can use is that table view to determine what your expiration date should be and, what strike price should be, as well as what your exit price should be. So this gives you a little more precision, saying, 4 days later or a week later, it's down 1%, or what happens 2 weeks later, what happens 3 weeks later, and so forth. And you can kind of gauge, how you should play this. In some cases, we have investors in the platform that do the opposite. They'll see a big move on day one, and you actually short the stock with puts in day two. Others are looking at this as a way to pick, longer term companies, maybe companies they've been watching for a while, and they're waiting for the turnaround. Company like Enphase, which had a really rough patch. If I zoom out, they can see, it's been in sell-off mode, and all of a sudden they do some layoffs, and now it's sort of trading sideways and starting an upward trajectory as they're cutting costs. There's some hope that interest rates will come down, and so that stock, performs like you used to. So some other ideas for how to use the system. Likewise, if you are interested in tracking specific stocks, you can create a watch list and just, click here to create a watch list. You can add stocks there and export the data. Our watch lists allow you to look at, lots of other indicators. So we want to get profit margin or, switch around to volume. You could do that, download that data, save that view. An interesting thing about watch lists is once you've created it, you can actually filter the events that are coming in by your watch list. So now I'm getting all the events that we cover in level fields, but we're just doing it for our watch list. And if I want to set an alert, then I can do that. Just say, watch list events. Save that. Now, in doing that, what's going to happen is I'll be alerted every time one of these events occurs for a stock on my watch list. You can also limit to just certain type of events. And that, may help you determine entry and exit points. Something negative that happens, stock goes down, maybe that's a good entry point. Positive event occurs, that might be a catalyst that you need, that, hey, I do want to get into the stock longer term. And, we see particularly with some of these repeat events that are happening kind of again and again, opportunities to go in a longer term. To give you a quick case study tour of Dick's here, sporting goods store that was sort of written off for a while. as in not really the strong stock. It was selling off. But if you just kind of zoom out and look at the key events that are happening, they're increasing the dividend, they're increasing the dividend, they're increasing the dividend, laying people up, cutting costs. And if you ignore kind of the market sentiment and just follow the events, you have a nice return over that period, despite the volatility. You're up 138%. You can also do the trades for some of the bigger events, like in this case, they announced over a year, 105% increase to their dividend. That's very, very significant. So why do these events matter? Well, it's management telling you something that you don't know. They are conveying confidence, but they don't need to take all that cash and put it into expenses or operating capital for fueling growth. They can take into a back you. That's how bullish they are on their forecast of sales. So it doesn't matter what pundits say. It doesn't really matter what the analysts say. The events are telling you what those who are closest to the data believe. And if you follow, those types of events, then you'll be rewarded over time. There's also one final case study I'll go through where understanding a macroeconomic environment is super critical and allows you to see things that nobody else might see. This is a company, you can see this. So this was March 2020. The market was selling off, and you can see in the background, let me see, then get rid of that for a second. Back. So this is up here, this line at the back down is the S&P 500, so you can see it just crashed, right? So the peak crash was March 23rd, and we were traced just a little bit. We're in the middle, almost the end of the crash at March 16th, 2020. So this company that nobody had heard of, instead of doing what everybody else was, which was slashing their dividend, trying to protect cash, firing people, they start buying back shares in their stock. Which is really odd behavior to do in a market crash and black swan event. Okay? Why would they do that? Well, it turns out that what they do is packaging and design for direct-to-consumer products. So what does that mean? It means if you need to get a product to somebody's doorstep, you hire them to design the packaging, all that crazy design and the plastic wrap that comes along with it, and whether or not, the toy is connected with screws and whatnot. They do all that stuff. And so if you're used to just shipping a box of your items to Target and then they open box and put them on display, you now have to change, because of COVID, how you do things. You can't go through Target. You can't go through a Home Depot. You got to get it straight to the consumer, which means everybody calls them up and says, hey, I need you to design some packaging. Business starts to boom, so much so that they just keep rising and rising and rising and rising, an exponential growth over the next couple of years. And so what do they do along the way? There's additional flags. They're doing more buybacks of stock, and taking all that cash and then giving it back to shareholders, doing more buybacks. Then finally, at the crescendo of it all, they say, enough with buybacks. Let's start a dividend. Then to give away cash forever, because we're so confident that the future's bright, that our cash flows are consistent, that the revenue is going to keep coming in. And the stock, over this period of time, like 10x, eventually got bought out up here. And it's the swab line. So, the blessed here on the case study is really you can use events to identify this sort of outsized potential opportunities if you can put the two and two together, right? The macroeconomic environment says you should not be doing buybacks, but this company was. And so if you found that, you now have 10x on this particular stock. And there's a lot of these in there. On a daily basis, we have all kinds of events that are occurring. What the level 2 subscription does, you can go back further in time You have more options for filters. You have more options for alerts that you can save. You have the premium alerts that we send. And you also have, the wisdom that we're bringing to it, using the system for many years and a maximize return. And these kind of events, they do happen, and they happen fairly often. These massive one-day price moves. So we are looking at just the last 3 months, you have these huge, huge events that are occurring. If you have any questions, please feel free to direct them to the support line. Likewise, you can also visit our help center. Me sure kind of do that. Just click the help button right here on the application. And they have a nice set of information, how I use the alerts, how I use the site, how I create a watch list, how I trade these, different types of scenarios, how I do filters. So import through this, lots of information. If you want to know what the impacts, meanings are, and the metrics are, you can look at that as well. But as a reminder, there's tons of information coming through, so would focus on 1 to 2 scenarios, get comfortable with them, watch how they move, understand how the data works. And the caveats for trading are always watch out for upcoming earnings announcements and major economic events that can throw off the trade, that can kind of neutralize a bullish trade.